When you have high interest rate or when you have growth uncertainty, optionality is valuable and there is a price premium. And so, if you're looking at like DER assets, an investor is willing to pay twice the amount, that's $1 per watt, compared to a utility scale, if there is optionality for incremental investments, because you're dealing with high interest rates or you're dealing with some uncertainty around growth or demand.
Are you speeding the energy transition? Here at the Clean Power Hour, our host Tim Montague bring you the best in solar, batteries, and clean technologies every week. Want to go deeper into decarbonization? We do too. We're here to help you understand and command the commercial, residential, and utility, solar, wind, and storage industries. So let's get to it. Together we can speed the energy transition.
The Clean Power Hour is brought to you by CPS America, maker of North America's #1 three-phase string inverter, with over 8 gigawatts shipped in the U.S. The CPS product lineup includes string inverters ranging from 25 kW to 350 kW. Their flagship inverter, the CPS 350 kW, is designed to work with solar plants ranging from 2 megawatts to 2 gigawatts. CPS is the world's most bankable inverter brand and is America's #1 choice for solar plants, now offering solutions for commercial, utility, ESS, and balance of system requirements. Go to chintpowersystems.com or call 855-584-7168 to find out more. Today on the Clean Power Hour, financial infrastructure for speeding the energy transition. My guest today is Tooraj Arvajeh. He is the co-founder and CEO of Perl Street. Welcome to the show.
Thank you so much, Tim, for having me. I appreciate it.
I've really enjoyed getting to know you a little bit, and there's a lot to unpack here. So I would just encourage my listeners to buckle up. And but this is a very interesting platform that covers a very broad swath of infrastructure related to the energy transition. And before we get into Perl Street, though, Tooraj, tell us a little bit about your background and how you came to co-founding Perl Street.
Absolutely. Thanks, Tim. So I started my clean energy career back in 2005. So this was pretty much a long time ago, and even before Al Gore's movie Inconvenient Truth came out, I became a sustainability engineer working for large EPC firms in Canada, in Australia and US, and so my job was to develop energy efficiency and clean energy projects. I was mostly working for large mining, manufacturing companies at the time. And I witnessed many engineers like me, while proficient at designing projects technically, we lacked the financial expertise to make them bankable for deployment and investments. So back in 2013, 14, I co-founded a fintech startup in New York called Block Power, and we were backed by VC and asset management funds. And firsthand, back in 2014, 15, I learned that it was very difficult to actually finance and deploy distributed energy assets at scale that is needed to kind of generate the financial returns for unlocking larger scale capital. And these experiences led me to launch Perl Street, which finances and builds our platform business models to scale up for deployment.
Cool. So remind me, I know about Block Power, but I can't remember exactly what was the niche that Block was targeting.
Yeah, so we were targeting mostly low-income neighborhoods in New York to start with.
Yeah.
And so we were, part of the technology company was around building the project origination and asset management, but part of it was really raising the money from large institutional funds like Goldman Sachs in order to actually deploy capital at scale. into, building electrification, heat pumps, upgrading, old buildings, old houses of worships to become a lot more efficient. And so that also later on they can become compliant with local law 97. That was also a driving force later on in New York. Yeah.
Okay. But
Yeah.
so the basic premise there is reducing the carbon footprint of the built environment. Was there
That's correct.
was there a
And
specific technology that Block is leaning into?
so my primary role at the time was really looking at the heating systems
Yeah.
within these old houses of worships and really upgrading the boilers, air conditioning systems with a much better heat pump technologies
Okay.
and make them a lot more efficient. Yeah,
So
but
building
that process,
electrification.
that's right, that's right.
Yeah.
Yeah.
Okay.
And that process obviously becomes very complicated when you're looking at the large pipeline of projects. And so you need to have a proper, sort of fintech platform to really manage that process end to end. And that experience led me to launch Perl Street.
Gotcha. Gotcha. Yeah, I like this diagram. So we're going to talk about Pearl Street now, and go to pearlstreet.com, PERL, and go to the About Us, and you'll see this diagram, and it's got machines, projects, portfolios, and financial products, and then you are the glue that makes all of this work more efficiently, theoretically, right?
That's right. So essentially, like if you look at machines, EV chargers, heat pumps, solar, solar panels, they need to become projects. So that's the first step to become infrastructure as a service, whether it's lease, PPA, ESA. But then when you're looking at these as small projects, you have to actually bundle them into portfolios in order to make them ready for the capital market to underwrite and to actually unlock, funds towards it. And so that's when it comes portfolios. So building those aggregation and portfolios is really what we're also focusing on. And yeah, so we're basically doing, this diagram as you just described. Yeah.
And so if I'm a IPP like King Energy, we had King Energy CEO on the show recently, thanks to you. And King is developing solar projects on third-party owned real estate. These are malls and warehouses. Very important part of the commercial real estate segment because it's 90% of the real estate on the market, and something that was very hard to tackle for solar historically. That's because right. The tenants were not incentivized to upgrade the facility. But tell us, how does Pearl Street help a company like King that is building this fleet, a massive fleet of distributed energy projects across the country?
Absolutely. Yeah, as you perfectly said, so King Energy is one of our customers, and they're essentially building a large portfolio of these commercial rooftop solar assets. And so if you look at the financial operations, it involves origination, capital deployment, and asset management. And so King Energy, they are pretty much doing this at large scale for many small projects. And so what they need is a software platform in order to consolidate and normalize all of these financial data into portfolios. And so every project has its own project finance model, and typically finance teams usually use Excel as spreadsheets. Excel is known to be the language of programming language of finance. And our software, what it does, it actually doesn't replace our customers' complex Excel spreadsheets with some standard templates or black box software codes. Instead, what we do, we work with it, and we are able to read and parse these Excel spreadsheets and make them into a database that now our customers use to do all kinds of sophisticated, equity, debt financing, tax equity structures, workflows, waterfall calculations, all kinds of project insights and accounting that is needed. And we also have very a suite of what we call integration features. So we work with major brands of solar inverters and batteries in order to actually get the data for risk management, variance analysis, as well as CRM and ERP systems in order to really make sure that the data is consistent across all of these software products that our customers use. Yeah.
Mm. So let's just break down what's going on in solar and battery storage, finance, deployment, asset management.
Yep.
What is the state of the state in the U.S. and where do we need to get better in order to get the energy transition done faster? That's really, there's no question, Tooraj, if the energy transition is going to happen. It is happening. It is going to happen. It's just a question of how quickly, right?
That's right. That's right. I think if you look at project life cycle, right, the starting point is really how do you achieve, if you think about scalability in this, in this space, like, okay, how do we make this faster and larger scale? The key point that we have to address first is what we call project development. That is the starting, right? And so in the DER space, if you look at behind the meter assets, mostly for residential or commercial buildings, is generally done by contractors, energy engineers, facility managers. These are the folks that are pretty much at the forefront of identifying the right opportunities for the real estate asset. And I think the first point of attack attack is really looking at how to equip these professionals at the real estate level to really become project developers, like almost act as ESCOs, right? And really become part of these what we call energy services companies. Like, how do you develop these bankable projects? So that is the first one. A story of DER, and if you actually look at the evolution of it, and this is why the role of these professionals is very important, is that initially DER, it starts as almost like a retail, green premium product. Like if you look at Teslas as EVs, green premium product that people just loved it and bought it. Nest thermostat was actually before that, right? Before Tesla, was like a very good looking, nicely designed thermostat that people love. But then later on, it actually became part of virtual power plants, right? And so initially it starts as a retail product that people pay for. But then when you tap that market, then it becomes what we call real estate investment. This is where essentially you're looking at a finance heavy asset focused model, that the product is not sold as a green premium, but as a green discount. Now you're looking at energy savings or improved NOI for real estate assets. Now financing these assets really is much closer to real estate investments as opposed to like larger scale energy projects. So PACE is a good example of that. PACE is pretty much like a real estate, a structured finance. And so when you have this stage before you get to the energy infrastructure, which is where DERs become, virtual power plants, or they, defer, transmission and distribution investments, you really need to build the pipeline of these projects at the real estate level. And I think the first point of, attack is really to enable these energy managers, contractors, to become seasoned ESCOs and project developers. And so that's one of the tools that we have on our platform, which basically looks at all kinds of risks associated with real estate investments, like what are the environmental, title, credit risks. It provides tools how to price these projects as a service. If you want to do it as an ESA or PPA, how to price it properly. And that makes the contractors a lot more intelligent and informed in terms of how to identify the right opportunities that could become investment opportunities.
The Clean Power Hour is brought to you by CPS America, maker of North America's #1 three-phase string inverter, with over 8 gigawatts shipped in the U.S. The CPS product lineup includes string inverters ranging from 25 kW to 350 kW. Their flagship inverter, the CPS 350 kW, is designed to work with solar plants ranging from 2 megawatts to 2 gigawatts. CPS is the world's most bankable inverter brand and is America's #1 choice for solar plants, now offering solutions for commercial, utility, ESS, and balance of system requirements. Go to chintpowersystems.com or call 855-584-7168 to find out more. Yeah, I mean, as I'm famous for saying, 90% of rooftop solar projects die on the vine. This is in the commercial world because of things like roof condition. The roof is too old to solarize, but perhaps too young for the owner to go, oh, I'm going to put $500,000 into putting a new roof on my building that could last for 10 more years.
That's right.
And but it's very kind of niche and specific to the facility. And so I'm just curious, like this seems, I'm just being completely transparent here. What you're doing at Perl Street seems to me to be very ambitious. And I am not afraid of ambition, but is it like where the rubber meets the road, like with King Energy? Is that a place where you are getting lots of traction, or is it that you're getting a little bit of traction in a lot of different places?
So right now, we're getting a lot of tractions in various specific markets of DR, especially with third-party owners and asset managers.
Okay.
Because when you are a third-party owner, right, as opposed to like a real estate company that owns a bunch of rooftop solar. When you own a bunch of rooftop solar, those are not revenue generating assets for you, really. They're assets that, maybe create some savings, but they are not a revenue generating assets. But when you move to the third party ownership structure, now you are talking about assets that are supposed to perform at certain level. And you also have institutional investors behind you that are counting on reliable information about these assets. And so we're getting a lot of traction in that space of third-party ownership of DR assets because there is mandate and there is velocity to deploy capital at larger scale, but also perform much better than, let's say, utility scale projects. Because with these assets, you generally have shorter lead time. So you develop a rooftop solar within like 12 months versus for a larger scale utility might take like 3 to 5 years, right? And so there is shorter lead time. There is diversification of assets because now you're building a portfolio and that creates a lot of financial benefits. So the returns expectations for DR assets is actually higher. And so that's why technology becomes very useful as opposed to like just having a lot of overheads and a complexity in operation.
Yeah.
So
when you're, I'm curious, like, how do you propose the value proposition if I'm an IPP, using some more standard, old school approach of spreadsheets and Dropbox to doing my business, so to speak, before versus after, and so how do you frame that value proposition?
So the value proposition for the DR or solar rooftop company, it comes into three things. One is a scale. Like you want to get into gigawatts of assets under management because that's how you can attract much better cost of capital
Mm-hmm.
from large institutional investors. So number one value proposition is the scale. Number two is, well, you don't want to scale at all cost. You need to have returns. So number two is return, right? Return is eventually what matters the most. You want to generate good IRR on these projects, right? 15%, 20% IRR. This is, what makes it attractive for your assets. And the third is essentially a standardization and unification. So what we want to do, we want to make it very easy as possible for an investor or a lender to look at, let's say, hundreds of 500 kW solar rooftop projects as they would, for like a 150 megawatt larger scale utility project, right? So those are the three things that we offer to our customers as value props. Yeah.
And this comes at a cost, of course, right?
Mm-hmm.
I assume this is like a subscription model, and if I'm a small scale IPP with ambitions to become a medium scale IPP, what is the buy-in or the length of contract, so to speak, that I'm making to onboard Perl Street, and how long does that take? Like, what is that onboarding process?
Yeah, onboarding for us generally takes about a month to 3 months, depending on how, complicated the existing, data architecture is. And so our solution, in terms of the return on investment for our customers, is about reducing the labor cost for both project development and asset management. And let's say if you're looking at a 50 person solar developer, generally, on average, I would say at that size they spend about $5 million for project developments per year and about $1 million for just asset management and servicing. And so we can pretty much reduce those costs by 1 million, 1.5 million annually. And so even with a subscription fee that we charge, let's say 100K, 150K a year, we still improve the net margin of the operation by about 18%. So the kind of customers that appreciates our return on investments are the high growth customers, because they see lots of growth without actually, adding a lot of overheads, and that improves the net margin significantly.
Hmm. Well, what else should our listeners know about Perl Street and how you see the world? I'm curious, like, how big is the opportunity that you are chasing,
Mm-hmm.
and what else should we know?
Yeah, I think DR is, as you mentioned, in its evolution, is going through a very interesting, a stage, which is now it's becoming part of what, from a real estate investment is now becoming part of energy infrastructure. So now they're part of the critical infrastructure, right?
Yeah.
So they provide resilient solutions such as backup power. They also, address the growing need for local energy infrastructure without much, uh, permissions and uh, uh, you know policy sort of impacts. And so the interesting phase that we are right now seeing is that DERs, or distributed energy resources, are getting aggregated into virtual power plants to meet peak demands. They also provide very cost-effective hedging strategies for energy retailers, right? If you look at, for instance, Texas, ERCOT energy prices are very volatile. And so, for energy retailers, DR is actually a hedging mechanism. And we see similar examples of that in Australia, which is very similar to, Texas from an
Yeah.
electricity market perspective. So now you have this evolution of DER that, okay, this is a very valuable critical infrastructure that can attract a lot of private equity funds, real estate funds that can get really good returns. So the opportunity here for folks is to really take advantage of this and really looking at building large portfolios. And as we mentioned, there is optionality involved, and this is what the investors are looking for when they compare, let's say, utility scale projects to a smaller scale DER asset, is that when you have high interest rate or when you have growth uncertainty, optionality is valuable and there is a price premium. And so, if you're looking at like DER assets, an investor is willing to pay twice the amount, let's say dollar per watt, compared to a utility scale, if there is optionality for incremental investments, because you're dealing with high interest rates or you're dealing with some uncertainty around growth or demand. And they generate the same sort of NPVs if you look at these two types of investment strategies, even though there's a premium to pay for DER. So these are the opportunities that investors are seeing, and investors are pretty much coming to Pearl Street looking for portfolios to invest in or to acquire. And if we work with developers and contractors and installers and enable them to actually aggregate these projects, they can earn a very good amount of income by origination of these projects.
Everybody wants to save money. That's the only guarantee in life, really. Check out all of our content at cleanpowerhour.com. Please give us a rating and a review on Apple or Spotify. Follow us on YouTube. Reach out to me on LinkedIn. I love hearing from my listeners, and look forward to seeing you at one of the energy shows coming up. So many great energy shows around the country. I'll be going to InterSolar in February. And with that, Tooraj, how can our listeners find you?
Yes, they can find me at perlstreet.com, PERL street.com. And there's a link to my calendar. They can book a time with me. And my email is tooraj@perlstreet.com.
Fantastic. Well, with that, I'll say, let's grow solar and storage. I'm Tim Montague. The Clean Power Hour is brought to you by CPS America, maker of North America's #1 three-phase string inverter, with over 8 gigawatts shipped in the U.S. The CPS product lineup includes string inverters ranging from 25 kW to 350 kW. Their flagship inverter, the CPS 350 kW, is designed to work with solar plants ranging from 2 megawatts to 2 gigawatts. CPS is the world's most bankable inverter brand and is America's #1 choice for solar plants, now offering solutions for commercial, utility, ESS, and balance of system requirements. Go to chintpowersystems.com or call 855-584-7168 to find out more.